traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right. Traders from across the globe, we are looking at a video for Wednesday, 12/17/08. And traders, one thing I can say is finally, we're getting something likely out of our hair. And you know what it is? It's this thing. Do you remember the parallel, head and shoulders, parallel, head and shoulders, parallel? Well, thank goodness we are above that. You know what? Let me use red on that one first. Thank goodness I don't have to talk about this in this video because we got above the channel. Hooray, we got above the channel. And guess what, of all things? Omni gives us a green arrow for tomorrow. Traders, you know me. You know that I am a bear. But indicators have turned. We've gotten out of that channel. The Dow Jones Transportation Average indicators have all turned. And the charts look good for a pop up. I am not turning into a bull by any means. No bottom calling, none of that nonsense. But you could get a nice two-day rally out of this week. The Fed really tried to give the economy a boost. 3/4 of a point, knocking the rate down today. The FOMC knocks the rate down to 0.25. That's what it costs to borrow money at this point from banks, from the Fed for banks. And you know what, traders? That's the Fed doing everything in their power to boost this thing if they can. Now, I don't think that that's going to be enough to do anything more than just keep us sputtering around down here for a while. But this is December. We know the specs are at the helm. We know the fund managers, the hedgers, most of them aren't in this. And it is free in December to go in any direction. Now, we've stayed with that head and shoulders channel, head and shoulders channel, head and shoulders thing for a while. We are now out of it officially as of trading on Tuesday. We got up above that channel, and all indicators say go green Omni. Now, I hope that this means that we're going to get at least a couple of days out of this. Traders, I will tell you, do not fall in love with the upside. Just don't forget we are in a bear market. Bear markets do have rallies, but they're usually not long-lived. Now, Omni thinks if we get lucky and we pull into the 890s, we're trading about 903 at the moment, Omni would like to get long in the 890s. Omni thinks you could possibly see the 940s with some resistance in the 920s on the way up and in the high 930s, mid-920s, and then again in the high 930s. But, boy, oh boy, Omni thinks we could get a pop out of this. Now, even if we did, it could only be the two-day rule maybe coming into effect where you get 2 days up in a bear market and then back down. But we don't know that yet, right? So I'll go with the indicators as I always do, and I'll go with the chart pattern. And speaking of chart patterns, I would like to show you something that you should find very interesting in the charts, traders. I got a bunch of good charts to show you. Make sure you come on down to www.livewithoscar.com. After you see these charts, you'll probably want to know how to spot these things yourselves, and we will be there to help you get that analysis right. Traders, let's go to the charts. Okay, traders, what you're looking at is the March Emini S&P daily bar chart. You have seen this chart before. It was the parallel leading into the head and shoulders and the parallel and the next inverted head and shoulders. Then we drew in the parallel that didn't exist yet and expected the market to stay in it. And it did for 1, 2, 3, 4, 5, 6 trading days, traders. That channel worked well. Go channel, being that we invented that channel before it ever happened. Hey, that's a lot of time to spend in something that you didn't even know existed until we drew it in, right? All right, but we are out of the channel and above the Omni proprietary average that I showed you in the last few videos. And indicators have pointed up, so far, traders, we can X this out and say we are past this now, and we are looking at something totally different. The beauty of trading commodities and doing analysis on them is that it's a never-ending story before your eyes. Every page is a new page. Every chart or every bar on a chart I consider a new page. And every move in another direction is another chapter. So you could call this a chapter, and this a chapter, and this a chapter, and this a chapter. Well, it appears to me we are about to look at a new chapter as these charts are morphing into something larger than an inverted head and shoulders, small here and a small one here. This chart is now morphing into something a little different. Now let's look at what this thing is morphing into. Okay, traders, what you are looking at once again is the Emini S&P March daily bar, and look at the formation building, traders. Do not fall in love with the upside even if we do rally. Why? I say just give it a little peck on the cheek today. Don't fall in love with it because take a look, traders. Do you see what I have circled? Look at the formation that is building here. This now is turning out to be a huge left shoulder and a head and a possibility of a right shoulder filling in, right? This is the same chart that had this and then this and then this, you know, that whole chart. Well, if you take a broader look at this, like a more of a bird's eye view, look at the forest from the trees, it's actually morphing into a larger inverted head and shoulders. Now, we don't know that we're going to fill in these question marks, but that's the way it's pointing right now. More interesting, we are above the Omni average, and on top of being above this average, we are in this apex. We just broke out of the top of a nice little triangle sort of apex, wedge, whatever you want to call that. It all comes out to about the same. We just stuck our heads above it on Tuesday's trading into Wednesday. With the indicators turning bullish, you may get a little pop out of this thing and end up here. Traders, one of the things we've learned about the formation that looks like this is many times you get a false breakout, a turnaround, and a major breakout to the opposite side. This may very well only end up being a false breakout so we can go back down through the bottom of that wedge. Now, we are in a bearish market, and when you see a wedge, the likelihood is if there is a false breakout, it'll be false to the upside, back down into the natural trend. What a great time for us to build this shoulder over here during the month of December into the first week of Jan. The market is free to pop up a little. Maybe you'll fill in the shoulder and knock us back down. That's too much speculation, traders. As you know, I let the charts speak for themselves. So what they're speaking for right now is simply coming out of the wedge. This is only a question mark. But for now, they're coming out of the wedge, traders, and let's look at a few more charts here. We're going to look at some indicators and a series of other charts to see what we got going on here. Okay, traders, now you're looking at three indicators, three of the many indicators that we use here at the Omni Trading Academy. This is the daily March S&P or E-mini S&P bar chart. Once again, the commodity channel index, the blue and red, that's pointing higher. As you can see, it's pointing up, bullish factor. You have stochastics, albeit they are a little bit towards the upper end, but you have this crossing, yellow crossing the red and pointing up, and for now, you got to call that bullish. Then you have the DMI, directional movement indicator, and whenever the green starts to cross through the red, that becomes a very bullish indication. That is happening right here, as you can see. So indicators, and this is only three of many, are pointing towards the upside right now. Maybe that's what we're going to get out of this. Let's look at a couple of more charts now and compare a couple of other indices and see if they're following in suit. Okay, traders, why I tell you not to fall in love with the upside. This is the Dow Jones Transportation Average daily bar chart. As you know, the Dow Jones Transportation Average is said to be the leader of the U.S. indice markets. The Dow theory includes the Dow Transportation Average within its theory being the leader of the other indices. With that in mind, look at what's going on here. Yes, the possibility of that head and shoulders is building here as well, right? You can see that. But we have not gotten to the top line of the apex as we have already in the S&P. We're all the way down here, traders. That top of the apex is much higher, and we are not above the Omni proprietary average yet. The leader has not broken out, has not gotten above the wedge, has not gotten above the Omni proprietary average, and we don't know if it'll ever fill this in. If the leader does not get above here, I do not expect the followers to go much higher. Now, indicators on this chart are also pointing towards the upside. But remember again, we are not above the Omni average. We are not above the top of the apex. We do not know if the shoulder will ever fill in. Let the leader lead the followers around. Let's go look at some indicators now for the transportation average. Okay, traders, we are looking at the same three indicators. These are slightly different, however. You will find that the Commodity Channel Index, or the CCI, has turned bullish for the transportation average, but all the way down here, at the spot where it usually travels for a while before it gets tired. That's interesting, traders. The leader says, I'm just getting warmed up on this little up move that we might see for December. Look at stochastics on the S&P chart. Stochastics were all the way up here. Remember, I pointed out that they are close to the extended mark. Well, not in the transportation average. Same thing with the DMI. The crossover is just beginning here, but we are not as high in the green as we were with the S&P. So that's another bullish indicator for the transportation average, which again I feel is the leader of the indices. So if indicators are bullish, we're getting to test the trend line, top of the apex trend line in the Dow Jones Transportation Average, and in the S&P chart, we are already above this little apex. Hey, maybe a little pop is coming our way. I wouldn't mind seeing a little pop. I'm tired of the downside. Let's see what we can get out of this. One more chart, traders. Okay, traders, the German DAX March daily bar. German DAX. Once again, that same larger inverted head and shoulders showing itself to be possibly forming the right shoulder. You are well above the Omni average, and for a couple of days now. You've done a lot of testing up here and stayed above. A little test below on Friday, right back above Monday and Tuesday. And we could easily fill in the right shoulder over here. Again, traders, I would not fall in love with the upside because, as we have all learned, an inverted head and shoulders in a bearish market usually produces nothing more than a small pop out of it and a return back to the downside. This is what you should expect out of an inverted head and shoulders in a bearish market. This is a bearish market. This is turning out to look like an inverted head and shoulders. A little pop up here before the drop would certainly be appetizing, especially if it happened throughout the month of December into the first week of Jan. Do your own homework, traders. Compare your notes with mine, and please make sure you agree with any recommendation before you accept it. So, you see those charts, traders? Hey, finally a new contender. This is what we have to contend with now. Don't forget, no more of that series of this, and this. The new contender on the block is the apex that we're starting to pop out of, right? The S&P. And then don't forget, you have this whole inverted head and shoulders thing possibly happening right here. So don't fall in love with the upside. But hey, we are above in the S&P with indicators pointing up. And I think I'll give it a whirl. I like the green Omni for tomorrow. I hope you like the green Omni for tomorrow. Don't get ahead of yourself, whatever you do, traders. If you are looking to buy this yourselves, it starts to go without you. You know what? If it goes without you, let the boat sail without you. You know, think of it like this, traders. If you are going to get onto a boat, you were walking down the dock, the boat suddenly leaves, it's 15, 20 feet away. Are you going to run and jump and hope you make it on that boat and possibly land in the ocean or the propeller, even worse? Or are you going to stop at the end of the pier and go, hey, the boat looks like the ship left without me. I'll catch the next ferry out of the dock. That's how you would act as a human, right? Well, when you're trading, if a trade gets away from you, it's like the boat leaving the dock. Let it go, traders. Catch the next boat. I am telling you, that will save you so many times. Don't chase. Never chase these markets. If you miss a trade, so what, traders? I would much rather be out of a trade wishing I was in than in a trade praying that I could somehow get out. And I'm sure you've all been in that spot before. And one of the worst ways to get into that spot is to jump after a trade that left without you. Keep that in mind, traders. Today, or I should say Tuesday, yesterday, Omni got short. We sold from 79 up to 84 the entire day. The high was 85 and change. fluttered in between like 78 and 85, never really gave us a fat profit. And then eventually, we ended up getting stopped out. A lot of traders either took a quick loss, some of them took a small profit, others got stopped out. Omni didn't work yesterday. On FOMC days, you never know what you're going to get. You know how that works. But it wasn't a bruiser, at least for most of us. Most of us were smart enough on a pullback to exit our positions, at least half our positions. So it wasn't so bad, but no way, we didn't win yesterday. Loser! Loser! Omni got slapped yesterday, but that's not going to stop me from today, because my Dukes are up, baby, and the Omni's up, and I say we go up tomorrow, so let's see what's going to happen. All right, traders, do yourselves a favor. Say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading, and you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.